Hi everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into a report from Semler Scientific, and let me tell you, it's a roller coaster of revenues, losses, and a whole lot of Bitcoin. This one might leave you feeling a bit like you're riding a crypto wave yourself. So Semler Scientific released a report about some early numbers for the first 3 months of 2025, and it has some interesting twists. First up, the company expects to report revenues, which is money coming in of about $8.8 to $8.9 million, the good news. Now, for the not so good news, they're projecting a loss from operations, meaning after you subtract all the costs of running the business, they're down $1.33 to $1.5 million. They do mention that this loss includes some expenses that aren't actual cash leaving the company, like stock compensation, which is like giving employees company shares instead of money, and some legal fees plus a state sales tax issue. And here's where things get really interesting. Semler Scientific has been investing in Bitcoin. They're estimating a big unrealized loss, meaning a loss on paper, of about $41.8 million because the price of Bitcoin has changed since the end of last year. Remember, this is just a paper loss. They still hold the Bitcoin as changed since the end of last year. Remember, this is just a paper loss. They still hold the Bitcoin. Speaking of Bitcoin, as of the end of March, they held about 3,192 Bitcoins. At the then current value, this was worth around $263.5 million value in crypto. There's also a potential expense called a contingent liability related to settling an issue with the Department of Justice or DOJ. The company is looking at paying around $29 to settle this. Finally, they have about 9.9 million nens in cash and things that are easily turned into cash as of March. Now, let's jump to another important part of the report where they talk about some other events. Remember that issue with the Department of Justice? Well, Semler Scientific has been in talks to settle a civil case. They've agreed in principle to pay $29.75 million to settle all the claims. But there's no guarantee a final deal will happen. If they can't reach a settlement, the DOJ could file a lawsuit seeking even more money. To potentially cover the settlement, Semler Scientific has entered into a loan agreement with Coinbase, the crypto exchange. Basically, they can borrow money or even digital assets using their Bitcoin as collateral. If the value of Bitcoin goes down, they might need to add more Bitcoin or repay the loan. The company also included a warning about forward-looking statements. These are statements about what they expect to happen in the future, and they come with risks. Things might not go as planned due to various factors, including the settlement negotiations, changes in the Bitcoin market, and other risks. Sticks. Now, let's put this all together and talk about what it means. Semler Scientific is in an interesting position. They are reporting some revenue but not making profits, and they are holding a huge amount of Bitcoin. This strategy could pay off big time if Bitcoin prices increase, but it also exposes them to significant risk if the price drops. The potential settlement with the DOJ is another factor. It's a significant amount of money, and it could impact their financial situation. The loan agreement with Coinbase is a way to manage this, but it also adds another layer of complexity and risk. One of the strengths of this company is definitely their willingness to take risks, although there are weaknesses to consider. Looking ahead, Semler Scientific is definitely a company to watch, especially if you're interested in the intersection of healthcare and crypto. Their success will depend on their ability to manage the risks and opportunities that come with their Bitcoin strategy and to successfully resolve the legal issues with the DOJ. Thanks for watching. If you found this analysis helpful, please like, comment, and subscribe for more Corporate Decoder videos.